Hey guys, welcome back to the channel. Welcome back to another video. Happy Monday to you, if you want to call it that. The market is still down, which was expected, and it's going to be a lot of uncertainty this week coming up to the Fed making their announcement of what they're going to do, how many basis points they're going to raise things, on Wednesday moving forward to get this economy back in order. Now, what I think, honestly, and this is just my opinion, I think, as an investor, especially as a new investor, if you are a new investor, or perhaps you're just a seasoned investor, now might be the time to really take a look at ETFs or roll a lot of your, excess earnings in the ETFs because it's the safe bet right now. The market is too predictable. Things are all over the place, and you want to have some type of cushion to lessen the blows that we're going to be taking with a lot of these earnings reports that's going to be coming out in the near future, and you want to get caught with just having a stock, without any type of protection. And exchange traded funds are the excellent choice in doing that. Now a little bit about it. I mean, if you're already a seasoned investor, you know about ETFs. But for a lot of my new viewers or people that don't know, an ETF is basically an exchange traded fund. It trades like a stock, but it acts more like an index fund, whereas it's like a basket of stocks, like an index fund is. That's what I mean by that. Some of the advantages, it's less volatile, and that's the big thing. It's less volatile than having the individual stock. You could have a ETF, which is a fund, and like these funds, the thing that's crazy about these funds are the fund. When you invest in an ETF, ETFs are like where you can invest in a particular sector. It could be an ETF, a fund for that sector. It could be industrial, retail, technology, all different type of sectors in the investment platform you can invest in. And or it could just be an index, your NASDAQ, S&P 500, your Dow. These are all different individualized sectors and places you can put your money at, where it would depend on how the sector or the index does, that will have an effect on how you're doing. Now nowadays everything is dropping, so a lot of people are like, well, they don't know what to put their money in, and they don't know what to even deal with it. Or some people are like, hey, I don't even want to invest. But I'm telling you, this is the perfect time to do it because, like I said in all my videos, once this turns itself around, you're gonna thank yourself. You're gonna be glad you did. Now, more advantages. Some ETFs pay dividend. Some of them do. I'm an avid investor in ETFs. One of my three portfolios is nothing but all ETFs. Now I strategically bought these, to do different things, and some of them intersect with each other. But I mean, for the main, for the best part, they all have been doing what I planned and my goal to have them do. They're doing it. They're performing well. Now, am I down? Yeah, everybody's down. There's nothing you can really do about that. But the diversification that's offered with me having my money in ETFs, I don't take that much of a hit, going down. And when the market's going down, I don't take that much of a hit. And that's a good thing about the ETFs. Like with me investing in these ETFs, I mean, I feel comfortable, and anybody that's dealing with ETFs or anything like that, you see that your portfolio is not taking as heavy a hit as other people that deal with just individual stocks. It's an excellent idea, for somebody that wants to diversify but doesn't want to go and buy a whole bunch of stocks and have a whole bunch of different stocks in their portfolio, or somebody that doesn't want to deal with just the stress of watching a whole bunch of stocks. ETFs are a definite play for you. You can build, like I said, you can build a diverse portfolio. What else? What else am I missing? Like I said, they're less volatile with stocks. Now, the only thing is they rise and fall with the market. But the way I look at that is this. If the market's going to fall anyway, I'd rather the market fall with me having my diversification already done, to where when it's dropping down, All I have to do is just wait. And not one single stock, like I said before, is taking the whole weight of it, thus increasing my stress level. Because say like you have ticker symbol VOO, Vanguard S&P 500, right? Stock, that's 500 companies that the drop in the market has to be distributed among. So my dollar amount falls less than if I had 3 or 4 stocks that are in the S&P 500 and just watching them tumble month after month after month. Because some of these stocks are down 30, 50, 60%. So it's a little bit easier to stomach as long as you understand what it is that you're dealing with. It makes it all the less. Now, another thing about that's good is once that sector, the S&P 500, which is one of the major indexes, once that goes up, you see the immediate takeoff in the ETF. Whereas if you had like a singular stock, you might have to have a whole bunch of shares, to really see a significant push, especially if it doesn't pay a dividend or it's a very slow moving stock, like something like AT&T or something like that. But ETF, because it's being pushed up, when the market pushed up by a whole bunch of stocks, you will see a significant gain depending on the amount of shares that you have. So it's a good thing. Some of the stocks that I have, well, in my portfolio, some of the ETFs that I personally deal with, I deal with Vanguard S&P 500 ETF, which is ticker symbol VOO. I have HACK, which is HACK. That's my cybersecurity ETF, because I think cybersecurity going forward in the future will be a great thing, and it's going to be something that's going to be highly in demand, especially with us going into the EV era. BND, which is the Vanguard Total Bond ETF, right? For some security, 20% of my ETF portfolio is in BND, just as a hedge. But I mean, with the way the market is, I mean, you don't know what's going to happen with bonds and stuff. And then I also have VYM, which is the high dividend yield for Vanguard, right? It's all high dividend stocks. But I mean, guys, man, I love ETFs. Do I think you should just get all ETFs? And it depends on what you like or how different your investment level is. And that's another thing I should have added in the beginning. When you invest in, there's multiple kind of investors. And when you're young, like 18, 19, 20, a lot of times those type of investors are aggressive. Those are like folks that like jump into stuff where it's a high reward, but it's a higher risk. Stuff like Tesla, and among other stocks. A lot of people jump into IPOs. I don't jump into IPOs, but like Roblox and stuff like that, stocks like that, where it's a lot of speculation with them. At my age, I can't do that, but a lot of people younger can do, and they can be more aggressive. You got your aggressive, then you got your semi-aggressive. Some people that have a lot of growth stocks, and they might have smaller amounts of dividend stocks where like they can say, okay, well, at my age, I can take a little bit of risk, and then you got people like me that, okay, I don't even fool with whether something's going to work out or not, long term, because I only got so many years left on the planet. So I jump into something that's safe to moderate. My risk level is kind of moderate, where like I just put my money into stocks that I know pay a dividend every quarter, stocks that are going to be here long after I'm gone, and where my grandchildren will still be here, and something that'll constantly turn over a profit, and grow my portfolio. No matter if it's slow or not, it will steadily grow. And I've been doing a good job about that. And like that goes back to, the times that we're in right now. And that will help you, because if you are all in stocks right now and you're going through this drop and you're not dollar cost averaging, you got to get past the negative of where you are to even get back up to breaking even and then going off. A lot of times ETFs are good in handling that, because you wouldn't have to deal with one stock. Getting back to where it was, when you're dealing with a whole portfolio or basket of multiple stocks, as some are still coming up, some already be in the green and past their 52-week lows or their year-to-date lows, and it'll still propel the index. You know, like say like the index is taking off, S&P 500, Dow, you have one of these type of stocks, you could have a stock in there that's still in the red year to date, and the stock will still run green because why? It's being backed by other stocks that are doing well. You know, if one stock is doing bad in the market, or like say you have a portfolio with 10 stocks, 7 of them are doing bad in all different sectors. You know, imagine if you had 10 stocks in 10 different sectors, you might not even have that loss counted. It wouldn't be that severe of a blow. But I mean, yeah, I just wanted to chime in a little bit and talk about ETFs and what I'm going to be doing this upcoming week, you know, and beyond. So, I mean, I don't want to say it like, you know, this is just a decision that needs to be made today and what you need to do now. But like if you're a new investor and you just jumping in, I suggest, you know, and it's just my advice, you really take a look at ETFs. Yeah, they're slow when they're growing, but until you figure out how the market works and we get past this storm that, you know, a lot of people are not ready for, or a lot of people have never experienced, ETFs are an excellent form of learning how to invest and to take it slow while you learn where you want to go and figure out your ultimate plan in your investment journey. I'm Steve as usual. I appreciate you guys spending the time with me. If the video was educational for you, please do me a favor, hit that like button. As always, subscribe and share the video, get the word out. I appreciate if you leave me a comment as well, and I'll see you guys in the next video. Thank you so much.